Good morning, everybody. Welcome back to Strongman Personal Finance. Yes, my hair is messed up, and I don't care. So sue me if you don't like it, boyo. Anyway, we're gonna do a quick video about one of my favorite stocks, a stock that is near and dear to my heart. It's called Palantir. Why do I love Palantir? Because it makes it so easy for me to make fun of how massively garbage it is, okay? You know, on my channel, what I do is I like to expose a bunch of financial losers. You know, people like Jeremy Financial Education, Meet Kevin, people that are grifting off a bull market and charging people significant sums of money to sign up for their courses. That's kind of what I do, all right? I also like to look at stocks, individual stocks. Most stocks I don't like, to be honest. Most stocks I think are overvalued right now. There are some that I like Baba, but you do your own due diligence. There's also a ton of stocks out there that are being pumped on YouTube that are complete money-bleeding, life-destroying, soul-sucking trash, okay? That's probably going to have you down at the truck stop selling your butt in retirement because they're so bad. One of those stocks is Palantir, okay? Palantir is basically this software company that, they provide services to the government to help, compile data, make it readable and analyze data. It's a very specific, it's a company with a very specific industry. It provides mostly services to governments for surveillance, stuff like that. We don't have to go into details because I just look at the numbers. If I don't like the numbers, I don't really care about the stock that much. So let's go look at this article from Seeking Alpha. And then I'm going to show you how stupid even Wall Street can be. All right. Should be able to see my screen. Yes. So here we are on Seeking Alpha. Palantir, big money is flowing in. Now, what a lot of people do is they claim that since big money is flowing into a stock, that must mean there's something good about that stock and that it's a long-term buy. No, that's not the case. Sometimes big money, a lot of times big money, is pretty freaking stupid, okay? They're either doing it to do a short-term trade or they're run by a bunch of gambling clowns, okay? Even big institutions can be horribly wrong. Think of all the financial crises we've had. We think about the dot-com bubble, think about the recession in 2008 with the housing crash. Big institutions can be pretty freaking stupid, okay? They can get swept up in mania and bubbles, and it's your job as an investor to try to avoid that crap. Palantir is a good example. Big money is flowing in. Oh my God, that means I have to buy it now. Institutional investors bought approximately 8.3% of Palantir's total shares outstanding in the last 13F filing. Okay. Wow. I guess I have to buy it now. Palantir's bears may be in for a surprise. No, I'm not surprised. Okay. It's massively unprofitable, doesn't make jack for money, and it's been losing money like crazy, which means that they're probably going to keep diluting the shareholders. I don't care who bought the stock. Oh, I'm so surprised. Oh my God. So be careful of crap like this. Institution, how many institutions own this? Blah, 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 blah. And I'm sure there's going to be freaking YouTubers hyping this. All right. Now let's go look and see why I don't like this company. So here I have a website. It's called roc.ai. It's a new site that I found that has some pretty decent financial information. You need to go verify it yourself independently, though. So we're actually going to go look at a quarterly statement as well. Now, let's see what we can see here. So I looked up Palantir. Current share price, $21.41. PE, negative 79.73 cents. Negative 79.73. PE ratio relative to the S&P 500, negative 2.74. So obviously they're a massively profitable company if they have a negative freaking PE, okay? So let's go look at some of the metrics. Sales per share going up every year. Earnings per share, negative, 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 negative. And they've actually improved their negativity over the last 12 months. So in 2018, they had, if you owned a share of Palantir, you lost 42 cents. In 2019, if you owned a share of Palantir, you lost 42 cents. In 2020, if you owned a share of Palantir, you lost 66 cents. And earnings per share for the last 12 months is 27. So maybe they got a couple contracts, new contracts, or maybe they fixed some of their, horrible financials, but they're still losing freaking money. Okay. Next, let's look at free cash flow per share. So this company is actually generating positive operating cash flow. And we'll go look at the most recent quarterly statement, which is a surprise. It's like, okay, maybe there's some hope for this company, but on the accrual basis of accounting, they're getting freaking hammered. Okay. So you can see free cash flow, negative, 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 and then a slight positive free cash flow over the last 12 months. So I don't know if that's a fluke or if that's going to last forever. Shares outstanding. 1,300. 2020, they issued, let's see what percentage they diluted their shareholders by. 1,764 divided by 1,390. They diluted their shareholders by 26.9 freaking percent in 2020 by itself. And then over the last 12 months, they've diluted their shareholders roughly 4%. So not horrible, but still pretty freaking significant. Okay. Every time they issue shares, they cut away your portion of the earnings. So, I mean, I guess earnings per share, loss per share would go down if they keep diluting. So maybe that's the reason that the loss per share went down. Wow. Let's look at the operating margins. Negative 100% in 2018. Negative 77% in 2019. Negative 107% in 2020. Negative 36% over the last 12 months. Profit, negative 580, 2018. Negative 580. Negative, that's probably $1 billion. They lost $1 billion in 2020. Jesus. And they lost $500 million over the last 12 months. God, look at these look at the net margin. Negative 36%. This company sucks. Okay. But it's the future, bro. It's the future. Palantir builds and deploys software platforms for the intelligence community. It's like it's spying on you. Probably watching me right now. Are you criticizing Palantir, boy? Hey, you. We're going to take you out, boy. In the United States to assist in counterterrorism investigations and operations. It offers Palantir Gotham, a software platform for government operatives. I can see why people like this because it's like cool and exciting. Oh my God. Anyway, so yeah. And if you look at their most recent quarterly report, we can actually go look at the cash flow real quick. So I looked at the debt and the equity. They're not going to go out of business anytime soon. Let's see. Total current assets, 2.8 million. Total current liabilities, 681,000. And this is all in thousands. So add 3 zeros at the end of all these numbers. So they're not going out of business anytime soon. They have a pretty big cash position, which that doesn't mean anything. That just means they probably had a big share issuance or they're just not deploying their cash. Debt to equity ratio, let's see. Their total liabilities, their total debt is just under $1 billion. And their total equity is $2.2 billion. So not bad. The reason they have all this equity, though, is literally from share issuance. So you can actually tell that because, let me see if I can zoom in a little bit. If you look at their balance sheet, you go to the bottom and you have stockholders' equity. So you have preferred stock, which looks like they don't have any. Then you have common stock, which is like what stocks you're probably going to buy. And then you have additional paid-in capital. So when a company issues stock, they have to record the par value of the stock, and then anything above the par value that they receive for cash is recorded as additional paid-in capital. In this case, the par value is 0.001 cents. So really, the additional paid-in capital shows the vast majority of money that Palantir has gotten from shareholders. So the only reason they have positive equity is just giving out stock because they've had massive losses. Their accumulated deficit, their total losses added up together, $5.3 billion. Over the life of this company, they have lost $5.3 billion freaking dollars. It's freaking nuts, okay? And I got like 2 minutes. So I need to get out of here very shortly. Now, if we go look at the statement of cash flows, where is it? Hello? Where is it? Oh, here it is. Palantir Consolidated Statement of Cash Flows. Net loss. Let's see. Net cash provided by using operations. So they actually had a pretty significant, well, I wouldn't say massively, but they actually had positive operating cash flow in the last 9 months. So that's actually a little encouraging for this company. Okay. I don't know if that's going to continue, but they have had positive cash flow in the last 9 months. Compare that to the previous year where they had negative $278 million in outflow. So at least from an operating cash flow operating standpoint, they are profitable. But from an accrual basis of accounting, they're not. So I would say the heck away from the stock. It's freaking garbage. Let's see. All right, quick. I got to go real quick. Never understood what's so special about Palantir. It's because it's like exciting and government and spies. That's why. It's like that's the only reason people like it. And you know, if they do somehow make it, they probably have a monopoly. If you had to buy one, would it be Tattooed Nutsack or Palantir? Honestly, probably Tattooed Nutsack. The Tattooed Nutsack's closer to profitability than Palantir is. I bought heavy on Palantir too. Yeah, Tom Nash is a loser. Me too. Before we go, can we get a Tesla? Tesla! Happy? Was that good? Was that sufficient? My man. It's like 30% of my portfolio. Jeez. Well, you know what, man? If you've done your due deed, maybe you're right and I'm wrong. I don't know, but it's up to you. I'm not going to tell you to buy or sell anything. You like my hair? I need to get a haircut. Anyway, I got to go. I got to tutor because you clowns don't pay me. You don't give me all your money through super chats. So I have to go tutor. I'll talk to y'all later. Cheers. This thing actually freaking closes down.